How's it going, everyone? Happy New Year. I hope everyone had a really good little break around Christmas. Made use of the time, took a little break from looking at the markets. I think it's important to spend some time with family, things like that around, the holidays. But now it's January 4th. We're back at it. I wanted to start off by letting you guys know where we're at with the positions we were in going into the new year. The main trade that we were in was we were short volatility on lit. Now, unfortunately, I had to close out my lit position today. Stock rallied 8% this morning, and that had a huge impact on the realized volatility level. Sometimes you have to just say you're wrong, get out of the trade. And this was one of those positions where we had to just bite the bullet. We were wrong on this one. Things were looking good for a bit. The stock was trending, right? If we look at the last month, we maybe entered somewhere around this mark here. Stock is now at 66 bucks. 8% rally today really hurt our position, and we had to cut it, right? We were betting on this level of implied volatility here coming down. Right? We see it's really, really high, well above the third quantile, but even so, stock was trending like crazy. Realized volatility was outpacing this high level of implied vol. We had to get out. So not a bother though. We basically, this is the importance of stressing your position before getting into it. We had to take a look and be like, what could happen to this thing? This is a part of what we see could happen. And then you get out. It's actually just that straightforward. So, sucks to see it go, but we're on to the next trade now. So this morning, what I wanted to do was take a look at any trades that you guys had ideas of as well. I have a few ideas that I'm going to be breaking down for you. But besides that, leave a comment in the chat box. Let me know what trades you're looking at today, and I'll be sure to go over them with you. Break down what I'm seeing through my terminal, what data points I'm taking a look at for it. But yeah, if you can share what stock you're looking at and why you're looking at it, I'd be happy to share with you ideas that I'm seeing. So to get started, main thing that I wanted to take a look at today was 4 stocks. We're going to look at Psth, NVIDIA, NEO, and we're going to look at ARK again. ARK is making all-time highs in IV again. It's right near the all-time highs again. And I want to break down why we're maybe seeing this and why I think it's still a good play to be short vol on it at this point in time. So first thing we're going to look at here is Psth. Now this is a stock. This is one of the SPACs that we took a look at last maybe a week and a half ago. And basically, this thing has crazy levels of implied volatility, right? 30-day options are implying an 88% volatility level. And look at this. This is really what's mind-blowing. Look at what's being implied here to the upside. All the risk for this thing is being priced in to the upside. What we're looking at here is the Skew Analysis. So we're basically taking a look at the strikes for the 10, 30, and 90-day expiration. And we're saying, what is the level of implied volatility for the at the monies versus out of the monies for the calls and puts, right? So if we look on the left side here, we're looking at the Delta 25 calls. Down here would be the Delta 75 or Delta 25 puts. And we're basically seeing that the level of implied vol is way higher on the call side than what we're seeing on the put side. So this is something that we can take advantage of if we have a bullish outlook on the stock. But at the same time, it's really, we want to ask ourselves, like, what is going on here? Why are we seeing this? The market is basically saying this thing is going to rip to the upside, right? It's not just going to trend up. It's going to have a huge move to the upside. And what's going on, everyone? John, Ned, Jekka, Ernie, Eric, what's going on, everyone? I hope you guys are having a really good day. I know a couple of you guys were in that lit position with me. We got to bite the bullet on it. It is what it is, guys. No big deal. So Psth, off the bat, we're seeing a couple things, right? Number one, the market's pricing in this risk to the upside. And when we look at this realized distribution, we do see a fatter tail on the right side than on the left side, right? We see this as, more out of its, if we were to normalize the distribution. But what this basically tells us is there is upside risk. There is a chance that this thing has some sort of a big move, But when we look at what's actually the values on this x-axis, we're looking at a 3% move, right? 4% move. Market's implying, like 6% move, right? So it's pretty crazy what's being implied right now. What we could look at doing here is a couple of different things. Number one, we could look at being short the level of implied volatility. So we'd maybe trade, a longer dated option, maybe trade a strangle or a straddle in, the 90 to 120 days out. But what we could also look at doing is structuring out one of those 1-3-2 flies to take advantage of this call skew if you have that bullish outlook on the stock. Right? I know a lot of people are really hyped up about these SPACs right now. Part of why we're seeing this crazy implied volatility level, which is why I think maybe being short, it's not a bad idea. But if you also share in that bullish outlook, one of the things I always say is don't just go and buy the call. Right? Unless you think this thing is going to go up 100%, don't just go and buy the call. You can usually take advantage of what the option chain's showing you to structure out something a lot better. All right, look at this, guys. Realized volatility's just been down. Implied vols just keep on climbing. And this could be for one of two things, right? Whenever I see this, I always think it's one of two things. Either the hype just keeps growing around this thing, right? Which I think is likely the case for this, or maybe there's some sort of insider knowledge here, right? There's some sort of big move that is going to happen. And I would say we're going to see this thing move a little. I'm not saying it's going to be completely flatlined, but what I am saying is that are we going to realize 88% vol in the 30-day term, right? What we're looking at here, right? 90 days are at the same level, right? For 90 days, we're implying an 85%, almost an 86% volatility. It's a lot for a company like this. So let's go over to Thinkorswim and take a look at this and see what a 1-3-2 fly might look like for it. So let me just go back to the terminal quick. Ned, what are you looking at today, man? You look at the short midterm. Let's see here. PSTH. Let's look at the Jan expiry. I don't have a ton of strikes here. Not many strikes for us. Okay, let's do this. Let's see if this would look all right. Okay. $2 only. I don't know if I'm going to have the strikes to really make this work. So what we could maybe do is structure a vertical to the upside. All right. 25.30. Oh. Right, if you take a look at that, we're getting about a 1-to-4 risk reward. Yeah, Jekka, Neo is actually on the list of things that we're going to be taking a look at here. John, how's that position playing out for you? Must be doing all right so far. So you can see here, if we threw on a vertical spread for PSTH, we're getting, about we're risking about 1,400 to make about just under 4,000. 3,500. We're getting like a 3-to-1 risk reward. And what really just needs to happen here is the stock needs to pop above 25. Right? So if you have that bullish outlook, you're getting that 1-to-4 risk reward here. Now if you think the stock's going to double in price, you wouldn't do this. But if you think this thing's going to trend up, all you need is that uptick, 1-day uptick, and you're going to make a lot of money here. We see, if we go back to the terminal, that the stock's been moving, a few percent a day. So all you need to do is get one move to the upside, and you should be okay. You'll make some money on this position. Now, I don't know if I share in that bullish outlook, and that risk reward is not necessarily enough for me to take on that kind of risk. But if you have that bullish outlook, you could look at doing this position. And all I threw together there was a vertical spread on PSTH, 25.30. Nothing too complicated here, and you can see that you're getting a pretty decent risk reward. About 1-to-4, 1-to-3. So that is the first trade that I wanted to take a look at this morning. But there's actually 3 more that I think are really worth considering. Before I hop into them, though, something exciting that's coming up is we're starting to get back into earnings, right? So end of this week, start of next week, a lot of what we talk about will be all the earnings events that are coming up. We'll be going over them live in the morning here. So if you're new to the channel, I know a lot of, we have a few new people here. Make sure to drop a subscribe, and we do this every single morning at 10:30 a.m. So feel free to stop by. We'll break down trades you're looking at, and I'll be sure to keep sharing the trades that I'm taking a look at personally. So BBBY and WBA, definitely. We'll take a look at those in a second here, John. Let me know what you're looking at for them as well. Do you have a particular trade in mind or a piece of news you're looking at? Let me know. Next up, I wanted to take a look at NEO. So for NEO, really just one thing that I want to take a look at here, which is that the near dated volatility is so high, right? This thing is just through the roof, okay? And it makes sense why it is. We have this NEO day coming up. I don't know a ton about it yet, so I'm not going to speak about what's coming out for that event. Let's see if we can pull it up quick. They're unveiling a new car and sharing the latest developments for their autonomous driving and core technologies. Okay. This is from their investor relations, I guess. So the big things that I would take a look at here are how confident are we that on what they're going to release. One of the things about Tesla's battery day, for example, was we sort of had an idea of what to expect during the event, right? Like there was no crazy surprises. I know they came out with a really cool battery and a plan for the future, but there was nothing in it that really rocked the boat. And because of that, or changed the future outlook. And because of that, we didn't see the move that everyone was thinking there would be. So when we're looking at NEO, we're seeing a very similar situation where implied vols are very, very high. Realized vol's been pretty high too. It's dropped off the last couple days. But actually, we saw a 10% move today. But this is one of those things where if you think that this event is going to be a bust, you could look at selling some of the short-dated vol around the event. So the event is on what, January 9th? Okay. So you would maybe look at, honestly, just selling a straddle at the event, right? A straddle or a strangle. I wouldn't try to complicate it any more than that. So if we come over, we take a look at the Jan 15th here. Okay. Yeah, look at the Jan 15th. Let's come down to... Why does this always happen to me? Yeah, we didn't pay the internet bill. Exactly, Pranav. What can you do, though? We have priorities. We had to hedge our lit position. Carlo, what's going on, man? I hope you're doing well. So yeah, okay, let's hop back over here. We literally look at doing something like this. Stock stays between 44 and 63 bucks. We're going to do extremely well. Right, as time goes by here, you can see we start to make a lot of money. And if we do end up getting that big move, we're going to be on the wrong side. Now, a lot of people would look at this and be like, let's trade an iron condor, cap our risk. The one thing to keep in mind there is we have some pretty pricey wings on this thing. So you just need to take a look at your wings, make sure that you're not overpaying for them. All right, let's go take a look here. If we were to throw on some wings for this, what would we be doing? All right, straddle's going for about 10 bucks. Okay. 53.65. Yeah, okay. So let's say we sold an iron condor here. What would it actually look like? Yeah, happy days to you too, man. Let's take a look. Oh, wait, I need to go back here. So we're going to go 10 bucks either way. Let's set this at 53.5 as well. Call, we're going to go up to 63.5. Oh, okay, we'll go 64. We'll do 64s. Wait a minute. Okay, we might have to go a little bit higher. So we might have to go 11 wide. So if we did the 54 and then the 43, is there a strike for that? Yeah, okay, the 43. So let's do this. 54, 54. Come up to 64 here, and we'll go down to 43 on this. Not traded. A 64 call. Oh, it's 65. Yeah, no, sorry, 65. There we go. Let's analyze this. One second here. So this is what we'd be looking at for this position. right? About little over 1-to-1 risk reward. We're getting about max risk of about $4,000 for 10 lots with a max payoff of about $7,000. So some people like to see that, but realistically, what we actually want to pay attention to here is where our break-evens are, right? We're basically saying now, we brought in our range a little bit by adding these wings, right? We have to pay for those wings. We can see here that the wings are costing us about $2. Pretty pricey, right? It's pretty expensive. But this is a decision that you have to make. You have to really think about how much you think this stock is actually going to move. If you're semi-confident, but you want that protection, you'd pick up these wings, basically cap your max risk. If you think that this thing's not going to move at all, you could go naked on this, right? If I were to be, I'm going to do some more research later today into actually what's going to happen around this event, what people are thinking is going to happen. And if I'm confident, I might just go naked on this, but we will have to see. I'll probably give an update later in the week about the research that I've done for this position to let you know what I'm actually looking at doing for it. So this is what we're looking at right now. If stock stays between 46 and 61 now, right? So we brought in the range about $2, $3 on each side, then we're going to be in the money. And if not, well, we're going to be in a pretty bad spot. So you can see here, this is maybe we're looking at getting to here, and we want to see a little drop in implied vols, which would be maybe a 10-point drop in implied vol. Let's drop this here. All right, and we'd be looking at something like this, right? We'd be looking at a payoff like this. Yeah, I know, Ned. Where's Kyle, man? It's absolutely crazy. So we have a lot of people on this stream right now. We have 22 of you here. Let me know what trades you're looking at. We should be taking a look at these together. Just remember this, outside of the people who are subscribed to this terminal and those of you that are here on this live, nobody really in the retail space has access to this type of information. They're kind of left having to look at the chart or just hypothesize in their own minds about what trades they want to take. But by taking a look at things such as this volatility cone, we're able to get a little more of an edge. So let's chat about these trades. Let's see what we can talk about and see if we can structure anything cool out. Guild. Okay. John, what are we looking at for Guild here? Pranav, this live is filled with plugs for predicting alpha. Come on, you know that. Pranav, you pay month to month. If I was scamming you, you would have left by now. Or are you saying you're just gullible? One of the two. So retail sentiment, extremely bullish. News, somewhat bullish. Company news. Oh my God, this is way too much. All right, which biotech stock's better? Cool. John, what are you looking at for this? Just taking a look here at the news, seeing if there's anything that stands out to me. Okay. Q3. All right. News is nowhere near as bullish as the retail sentiment is here. Option volume looks pretty in line with what we expect to see. Media coverage is down a bit for this stock. And Eric, John, do you have a actual tell me more about the foundation for this trade? Like, why are you looking at this? I see that the implied volatility is above the real, our forecast. If I go to the vol cone here, let's take a look. I can see that 30-day vol is right at the third quantile. Implied vol is really outpacing realized vol on this. Really small chance of any big blowout. Not seeing any fat tails there. The one thing about this, John, is I don't know enough about this stock to just say, yeah, this looks like a good short vol play. But the data is looking good. But we need to actually take a look at what other news might be fueling this thing, right? No upcoming earnings. Let's see when the earnings is. Okay, we're looking at a February earnings for this company. Well, no earnings doesn't mean there's no news, right? These types of companies, the earnings aren't necessarily what drive the volatility for them. It's coming out with results for tests or for new vaccines, things like that. But if we're not seeing any of that, or if we have an idea of when that will be, well, now we can actually structure out a really cool trade here, right? So you're looking at doing a fly, 52, 57, 62, 5. So is there that call skew? Okay, so we do have that short-term call skew. Okay, let's see what you got here. So we're looking at guild. Okay. A 52, 5, 57, 5, 62, 5 fly. Okay, let's pull this up. Seven five. Why are you trading the 57.5? Here, let's see. We're at a different. We're at $58 now. So let's see. I assume you're talking about like an iron fly, not a 132 or anything. So let's price out the straddle. Okay, it's going for 250. So let's look at 250 on either side. So we're at 58.5 right now. So we're going to sell an iron condor. Let's take a look. And we want our strikes at 58.5 for the body. Keep it at the money. And then we're going to go $2.50 either way. So we're going to put this call at 61. And then we're going to put this put at 55. Okay, you're collecting $1.87 premium. So you're paying about 70 cents for your wings. Not too bad. Oh, wait, why do I have these strikes messed up? 58.5, 57. How did I screw this up? 59. So then that would be 61, and then 58. Oh, this would be 56. My bad. Okay, so here's what we're looking at. John, what do you think of this? Do you think the stock, like, do you expect the stock to stay within this range? If we take a look at the forecast versus implied again, you know, I think something that's really good to see as well, since you're looking. Oh, I didn't ask you, John. What expiry are you looking at? Right, this would be the really near dated expiry, which, if you think that one thing that I'm seeing here is that the actual realized volatility level is low. Right, implied vol is high, but the realized vol is low. So trading something in the short term may not be a terrible idea. I don't know if I'd go this short, right, where we're talking about 10 days here. Maybe I would go to like the 22nd if there's enough liquidity, or you know, maybe even if you think that it's going to stay low for a while, you could trade even the Feb. But it's not a bad idea. I don't think this is a bad idea at all, assuming you have some sort of view on the news that's going to come out around this thing, right? If you don't have a view on that, I don't know if I would be taking it. We don't want to be guessing here, right? Just because, you know, the day, you know, we're forecasting less, we're not accounting for things like the big release that's coming out next week for them. So we need to really, really understand what could come out here. And we need to understand that our risk is that we get some sort of a surprise. Now, if we're confident that we're not going to, let's take the trade. So, what other stocks? Pranav was saying BA. Are you taking a look at this just because the 737 Maxes are going back into production? People are placing orders for them. Is that really what's driving it for you? All right, this is looking like a decent short vol play if that's what you're looking at. You know, I'm not seeing any. You know, like the way out of the monies on either side are bid up, but you know, even at the 25s, it's pretty flat. If we take a look at the vol cone here, we can see that, you know, implied vols, it's up there, but it's not like the market's not implying that this thing is like the whole world's about to change for this company. You know, it's pretty in line with what you could see, right? Volatility goes up, goes down, right? Mean reverts around this median line, and we're just seeing a little bit on the high side right now. Okay, Pranav. So you'd be looking at just shorting vol here. You know what? If you have a view, if you think there's no surprises to come out, when's the earnings for this? Okay, February earnings. Yeah, let it rip, man. Let's talk about it a little more in the Discord. If you can share with me what research you're looking at and the actual trade structure you're going to look at, we can break it down together right after this live. BABA. Yeah, so BABA is one of those ones that I'm probably going to recommend to stay away from. And I'm going to show you why, right? So Pranav, take a look at this. Well, right now, actually, it's looking like a long vol play, which is really interesting. Is it low risk? All right, implied vol's at 39. We're forecasting it to be at 51. That's based on the that's probably the realized volatility coming into play there. Because if we take a look at this, the realized volatility has been huge. Right? If you were looking at a short vol here, I would not recommend it simply because it's actually realizing a high level of volatility. We don't want to be going in and shorting vol when the stock's actually moving like crazy. Remember, if volatility was high today, it's likely to be high tomorrow. It doesn't just go back down right away. So a long vol play here may not be a terrible idea. And once again, we have that skew, huge skew to the downside, and to the upside, we have some skew as well. Basically, market's implying this thing is going to have some sort of big move in either direction. It's basically, for the near-dated options, the most likely thing, it's not going to move that much. But if we do get a move, it could be up or down. So maybe you buy a straddle here, right? You buy a straddle, hoping that the realized volatility in the short term continues to outpace the implied vol. It's not a bad idea, right? We'd basically be coming in here, taking a look at BABA. We go to, let's say, the 15th, and we would just do maybe something like this. Right? It's not cheap to put it on. Right? It's a big trade. A lot of money in this. But if you get that move below 214 or above 241, right? Stock's trading at 226, you're going to start making a lot of money really quickly. Right? Let's see what a one lot would look like. Right? You do have that max risk down here at $1,300. It's not it's not nothing, but if you do get any sort of big move, it's going to print. So one more I wanted to take a look at here. Two actually. Let's take a look at ARK. So Pranav, maybe you want to take a look at this. ARK is back on the radar. Right. Time for another dance with ARK, I think. The implied vol levels for ARK are back near all-time highs, right? This is where we were selling at around before. Right, we're seeing 90-day vol at 51%. Okay, this is pretty damn high. We are seeing that there's been a lot of big moves to the upside, though, recently, which is interesting because market's actually pricing in big moves to the downside right now. And that may have something to do with this drop that we've had. So a concept that we talked about, recently, we were looking at ARKG, but I guess this would apply for ARK as well, is when you have a whole bunch of assets that move uncorrelated on the upside, well, when the market gets a hit, all these things become more correlated. So you start to see an increase in this skew on the downside. So with this company, right, let's think about this for a second. Why would we be seeing so much volatility implied for ARK? Right? Why would options be so expensive around this company? And well, let's take a look at this, right? Let's see what ARK actually is made up of, right? So this is basically, let's look at just the top 10 holdings, right? Tesla, Roku, we got Square, we have TDoc, we have Z, PSTG, right? Spotify. These are the top holdings for ARK. These are the things that people want exposure to, right? Imagine you're sitting there trying to pick, you're looking at your Wall Street bets, you're looking at your Facebook groups, and you're seeing everybody's talking about these companies. These are the big ones that the retail community has their eye on 24/7, right? Let's take a look. Like if we go to StockTwits and we look at Tesla, look at how many followers this thing actually has. It's absolutely insane. If my computer will let me do it. It's not going to. But I don't know why. StockTwits never works on my computer. All right, take a look at the news and sentiment for Tesla here. Right, retail sentiment 90%. Right, everybody is bullish on this thing. The news is extremely bullish. Right, news sentiment's at 79%. We're seeing pretty low option activity for today. Not a big deal. Yeah, Pranav, I don't have any antivirus software apparently. It's just not working. This is crazy that it's not loading though. Let's give it a second here. All right, there we go. It's cooperating now. Right, 522,000 people in the retail space, right? StockTwits is 100% retail. There's no funds on StockTwits. Are looking at this thing. And if we look at the StockTwits sentiment, we're seeing about 78%, 77%. People are really, really bullish here. Oh man, StockTwits broke the live again. Daniel, what's going on? Good to see you here, man. Is the live actually down again, boys? No, we're up. We're up. Come on. It's maybe just lagging a little bit, but okay, let's get out of StockTwits. This thing sucks anyways. So let's go back to ARK here. Oh my God, guys. The lag is real, eh? Okay, let me know when we're back. Are we good now? Okay, so note to self, future live streams, I'm never going on StockTwits. Ned, I'm going to be relying on you to have StockTwits open on the side, or I'll bust out the laptop and I'll have StockTwits on there. But yeah, I'm never doing that again. Bad idea. Lesson learned. Okay, so ARK. We took a look at what it holds, and we're basically saying I could see a lot of people being bullish on ARK because they're bullish on the holdings of ARK, like all of them pretty much. Right? If you look at this, and if you're able to go on StockTwits, take a look at the sentiment on all of these companies, and you're going to see individually each of them are extremely bullish. And it makes sense that as more people figure out about this thing, they're going to want exposure to ARK as a way to get sort of sector exposure to the meme stocks. So what I would be looking at for this is a very similar trade to what I had on before. I'd basically be selling some long-dated volatility, right? So let's go back to the terminal or into Thinkorswim here and take a look at a trade that maybe we could do here. So we wouldn't be looking at the Jans. We'd maybe be looking at like the Junes. So let's take a look at the Junes here and keep it simple. We'll say that we're looking at a just a straddle even, let's say. All right, let's say we look at this. Right, you throw on this. What's going on here? Okay, so we look at something like this. Let's zoom in a bit. So you can see here that right off the bat, like we have a little bit of negative leaning deltas. You can change your strikes if you actually want to be delta neutral off the bat. That's probably what I would actually be doing. But let's talk about how we actually make money here. Do we make money with theta? No. Right? You can see as time goes forward, we're making pennies. We're making pennies. You can see that we have a huge break-even range on this thing, right? If the stock, instantaneously, if it stays between 107 and 135, we're going to be looking good. And in the long run, if it stays between 160 and about 93, we're going to be good. So the question is always, how do we actually make money on this thing? No, Pranav, it's not gamma. Come on. We've been over this so many times, Pranav. How do we make money on this thing, Pranav? What happens if vol drops 10%? That's how we're going to make money on it. We make money on this position because of our sensitivity to Vega. All right, look at this. We have very little delta exposure, very little gamma, some theta, and a ton of Vega exposure. So implied vol goes up, we're going to get hit pretty bad here, right? You can see if it went up 10 points, we would take a pretty big hit right away. But on the flip side, if implied vol came down, we would be looking really good. Now, why would I want to take that bet? Why would I want to structure a trade where betting on implied volatility coming down? Well, that's where things like this vol cone come into play. All right. So what we're looking at here, right, off the bat, we have a couple of different lines. What we're really taking a look at is two things. On the y-axis, we have implied volatility, and on the x-axis, we have days to expiration. So what we're seeing is the green line is the current implied volatility for different strikes through time. Right? You can basically say we are looking at the implied volatility in the calendar, right? We're looking at the term structure here. Well, when we're looking at that, questions we might want to ask ourselves is, well, what's the lowest it's ever been? And that's what this yellow line tells us, right? Over the last year, what's the lowest that the implied volatility's been for these different strikes? Or what's the max it's ever been? Or, if we wanted to get a little more statistical with it, where does it fall maybe 75% of the time? Well, we throw in the third quantile, and we know that below this line down here, we see 75% of the time, and above it, we only see 25% of the time, right? We throw in the median here. This is the average of where it is. And you can see we're starting to paint this picture now where it's like, wait a minute. The current implied volatility levels are extremely high, right? What can we expect to happen here maybe? Right, let's maybe take a look, right? If we go to ARC, and let's pull up the IV90 and the RV20, let's say. Right? So you can see here that we're approaching the top of that range again. And you can see as well that this is at the top of its range as well. So what's Ned saying here? Once the near DTE high implied vol passes, you think farther DTE will average lower? So it could, unless the realized vol is also really high, right? If the near dated implied vol is there and it starts to pass and it doesn't realize a ton of volatility, then you'll definitely see a huge impact on the long-term implied vol. But you have to remember that in that long-term implied vol is that current big implied vol baked into it. Right? So low realized volatility through that time will definitely have an impact on it. High volatility through that time, you're probably going to either see a small uptick or it maintain itself. So yeah, this is probably one of the ones that I'm more fond of that we've broken down today. Right? I would probably look at doing this. I'd maybe also do a strangle just to get more delta neutral right off the inception. But let me know if you're thinking about this trade. We can talk about it in the group, or if anyone here is not a member of Predicting Alpha and you want to talk about it on the live here, let me know what in particular you're looking at, and I can totally help you out with it. So let's also keep going here. Also, I just want to say we have 26 people on this live right now. That is awesome. It's actually the most we've ever had on this morning live stream. So thank you so much, everyone. Means a lot, and would mean even more if I could see 26 likes on this video too. I think that would really help with the YouTube algo gods, put us in the good books for them, and maybe we could see 30 on tomorrow's live. Last trade I want to look at is NVDA. Pranav, can you please like the video, man? I know you're sitting there all frustrated about lit. But drop a like on the video, dude. Everyone dislike it right now. Honestly, I think that helps as well. Okay, NVIDIA. Here's the thing. NVIDIA hit a bid today, up 4.1%. And there's really a couple reasons why here, in my opinion. Number one, crypto miners use NVIDIA products. Right? NVIDIA graphics cards, all this stuff, they're used in the crypto mining process. And we've seen crypto hit a bid, right? there's nothing to say. Bitcoin's sitting at like $34,000 right now. So you could see these related assets also catching a bit of a bid, rallying higher. And on top of the fact that crypto miners use a lot of NVIDIA products, we're actually also seeing NVIDIA wanting to expand into the blockchain space. So all of these, with the hype surrounding this whole blockchain Bitcoin technology right now, it makes sense why NVIDIA is seeing this bit of a rally right now. Markets implying, about a 2% a day moving forward for the 30 days. But, we have to ask ourselves, is this realistic? Right? We have a situation where the near dated volatility is looking pretty bid. Right? Let's pull this up. Oh wait, it's actually looking low now since my last update. Huh. So it's actually not very bid. Maybe at this point, honestly, I'm not going to recommend anyone take a trade on this right now. What I would maybe do is definitely keep your eye on this, right? If you see implied vol come down even a little bit more, you'd maybe actually be wanting to buy some vol here. It's looking pretty cheap, actually. Obviously, we're forecasting it to be a bit lower. And what that's really coming from is there's been no vol. Up until today, there's been no vol. So if we see that drop off again, we see tomorrow there's only like, a 0.5% move or a 0.3% move. Well, maybe selling short-term vol will be a good idea. But if we see, a sizable move tomorrow as well, buying vol might not be a bad idea. So this is something I would say this is not a trade right this second, unless you have some more insight than I do. In terms of the news for it, I don't have a ton of insight right now. I'm aware of the things they're looking into, but I need to actually understand it a little more. But really, this is one that could kind of go either way, right? Our forecast is a lot lower, but I kind of get why vol's been low recently. We're seeing that spike in vol now. So if you think we're going to continue to see this level of volatility, you want to be buying. You want to be buying vol. If you think this is a one-time spike and we're going to mean revert back down to the, or not even mean revert, we're just going to, continue to realize no vol, you want to be selling here. I'm also seeing we have some of that good old call skew here. It's not a crazy amount, to be honest, but it looks crazy just because of the graph. But you have to actually look at the numbers here. It's not too big. But you could look at structuring a vertical if you wanted to just have a more binary outcome. Like stock goes up, I get paid. You could look at doing a vertical. What I probably wouldn't be doing here is just buying an outright call unless you have a view that this thing's going to rally another 20%. Whatever you do, I'd probably be looking to trade the short-term options. We're seeing implied vols pretty high in the long term. Ned, take it easy, man. It's good to see you too. We'll talk later today. But yeah, I would add this to your watch list, 150%. We will probably continue to follow NVIDIA throughout the week. I'll probably check in on it tomorrow and then maybe later on in the week as well. But at this point, guys, I think this is going to wrap up the stream. We try to keep these to a half hour. We went 45 minutes today, but that's never a problem. But just so you know, we're going to be back again tomorrow morning, 10:30 a.m. So tune in. We're going to be going over more trades. And if you found this valuable, right, if you got any value out of this, make sure to subscribe, drop a like on the video. It's really all we ask for trying to go over these trades with you every single morning. So we'll see you again tomorrow, everyone, and have a great rest of the day.